Here we're going to talk about the statement of owner's equity. This is the third in a series on financial statements. The statement of owner's equity takes a look at all the activities that affect owner's equity. The income statement, which we looked at previously, just looked at revenues and expenses. Revenues increases owner's equity, expenses decrease owner's equity. And the group that does that is the business itself. The business sells things, which is revenues. The business uses things, which is expenses. So the business is affecting owner's equity through revenues and expenses. And those are the things that went on the income statement, because we're so concerned with the business making a profit. Now, the statement of owner's equity says, well, there are other things that also increase or decrease owner's equity. So let's take a look at everything that increases and decreases owner's equity. So, of course, we've talked in the past about owner's investments and owner's withdrawals. And owner's investments increases equity, and the owner withdrawals decrease equity. The statement of owner's equity, like the income statement, is for a period of time. I'm looking at the beginning of a period and how much owner's equity was there, and then throughout that period, how did it change, and now what is it at the end of that period. So is that period a year, a week, a month? And so I have to tell the interested user. I'm going to use the net income from the income statement. Rather than showing revenues and expenses separately, since we already showed them separately on the income statement, I'm just going to take the net income from the income statement for that part. The owner's investments and the owner's withdrawal, I will show those as being separate. Now we need to talk about the capital number. The capital number on the worksheet is the capital at the beginning of the month or the beginning of the period, and there is additional owner investments that are made throughout the month that are also in that capital number. So if I just look at the number on the worksheet, I don't know how much was already there at the start of the period and how much did the owner invest. And so in real life, I would have to look at the general ledger, and I could see how much the owner invested throughout this period, and I could see what the capital number was at the beginning of the period. But what we're going to have to do, since we're not in real life, is we're going to look at the number on the worksheet, and I'm going to have to tell you, or the homework problem is going to have to tell you, how much did the owner invest. And then you're going to take that number and subtract it from whatever number's on the worksheet to get how much of that number was there to begin with. So here on the Canvas delivery, we have on the balance sheet columns of the worksheet, we have Amanda's capital account, which is $2,000. And out of that, some of that was there to begin with, and some of it was put in during the period. So we're going to pretend that Amanda invested $100. Okay? So what we're going to do is take that $2,000 from the worksheet. We're going to subtract the $100 that we're saying that she invested during the period, and that means that there must have been $1,900 in the capital account to start with. Again, I would have to tell you the $100 since you don't have access to the general ledger. And so you would take the worksheet amount, subtract out the $100 that was invested this period, and that would give you the $1,900 that was there to begin with. So here we have a statement of owner's equity started, and again we have our heading up there, and it says for the month ended or for the year ended, etc., and we use the last date of that period. Then our first line is the beginning capital. You can say Amanda Adams capital, comma, June 1st, or you can say beginning capital, or you can say he is here beginning capital June 1st. Okay, and that is the 1900. Then we're going to add everything that we need to add that increases equity, and then we'll subtract everything that decreases from equity and come up with an ending capital number. Here we're showing that net income is also added since it's a positive number. Revenues are more than expenses, so that means that we're going to have 1,015 is going to be increasing equity. If we had a net loss, meaning expenses were more than revenues, then we would have to subtract it because that is decreasing equity. Now that we've added the owner investment and we added the net income, now the only thing left is owner withdrawals, and that needs to be subtracted. Owner withdrawals decrease equity, so we put the words less owner withdrawals. And that number came off of the worksheet, the owner withdrawal account. Now those three numbers, the owner investment, the net income, and the owner withdrawals, are over in the left-hand column, and that's the detail column. I have a line under there. I'm going to add and subtract those, so I'm going to add the 100, I'm going to add the 1015, I'm going to subtract the owner withdrawals of 150, and that gives me 965. Okay, but it's still a positive number, so it's still going to increase owner's equity. And so I have my label over to the left. It says increase in capital. If it was a negative number, I would say decrease in capital. This is increase in capital. I put it over in the total, the summary column, and that is underneath the 1900, and now I'm going to be adding it to the 1900, so I put a line underneath the 965. Here, I'm going to take the 1900 plus the 965, and I get $2,865. This is, over to the left, I'm going to put my label, ending capital. Okay, so now I've started out with 1900 in the capital in my equity account, and I've showed everything that increased it, which was owner investment of 100 and net income of 1015, and everything that decreased it, which was the owner withdrawals of 150. And I come down then at the end of the month with ending capital of 2865. This is the number that I'm going to use when I get to the balance sheet. So this statement of owner's equity needs to be done before you do the balance sheet. So now that I'm done, I'm going to put a dollar sign up at my 1900, first number in that column, up at the 100, which is the first number in the left-hand column, and down at the grand total, the 2865. And I'm also going to put a double underline under that grand total of the 2865.